Hey guys, how are you? Happy Wednesday, wonderful October to everyone. New months, new exciting moments. Thanksgiving coming, Halloween coming after that. Great months it is. Getting very close to the end of year holiday season. Please give me some okay that you can hear me and that you can see the screen. So we can start. Beautiful. Thank you very much. So let's begin then. We have very important discussion today. Hi guys, hello, hello. Thank you very much. Got your confirmations. Appreciate it. Thank you. We have several updates, several running trades, several changes in directions, and several cash outs and several invalidations all together, right? And this today it's very important session because I want to explain how important it is not just to make a decision of direction and okay, let's hope for good, but to follow up, to see how the market develops, and to stick to facts. If it develops perfectly, manage that. If it doesn't, make some thinking. Maybe the traders are not in the instrument. So let's begin. The first one, Aussie franc. Our idea was bullish as long as the trend line was holding. Jordan updated yesterday in his session. This idea failed after the two trend lines were broken and never delivered any bullish momentum. Gone. The question is what's next? According to the weekly cycle, we're still bullish. However, we will need to regain the bullish momentum, and this is the one I follow in this structure. Bullish divergence in play, sorry, from here. The 61.8 of the daily correction still holds. If we manage to break this trend line, which likely to happen next week somewhere, then we are back to bullish. Too early to know, therefore, as for now, the first long idea failed. The news from Australia changed the direction. In that case, the news did not help us. The idea failed, removed from the list. Next one on the list was the cat franc, where we expected to see higher highs until the daily and the 4-hour would become bearish divergences. So our idea was buy retraces. Let's quickly take a look what did we have on the cat franc. So here are the retraces, a bullish hidden divergence in play, and the continuation. And now look what happens. As I always say, when you're trading shorter term positions, ride them until you see lack of synchronization situations. What does that mean? When we are here and a bullish divergence comes in play, up to here, do we know in advance, or can we know any way that it will be a huge move that will take us to completely new highs, let's say something like that? Or will that be just another leg until divergence would come? When you start a trade, there is no way, and I repeat, there is no way to know how big the move will be. All this thing called trading is coming from statistical numbers and probabilities. And it's important to remember that because, you know, especially when you look around on the internet and forums and I don't know where, it looks like everyone knows where it's going, right? This is going to Fibonacci, this is going to moving average, this. There is a very good saying that even a broken clock would show the correct time twice a day. So it's very important here because, of course, everyone will discuss always when things work, not when things fail. It's important to remember that. Now, why do I say that in advance, we never can know, because when you start a trade, you must value your risk reward, your risk, your potential ideal reward you might aim, and this one has to be as big as possible, or at least 1 to 2. In bigger numbers, I prefer even 1 to 3. Why it's so important? Because your initial risk reward plan is the one that will allow you manage your position on the go if it shows signs against you. So if you start a position with, let's say, 1 to 3 risk reward, but after 1 to 1 risk reward, you already see signs against, even if you make cash out or partial cash out or just go break even, you are already in a very good place. Even if you do cash out 1 to 1 risk reward, if you work with more than 50% successful rate, will lead you to the desired growth. It's very important to understand these numbers, because in theory they all sound good. It's hard to stick to them when we trade live, right? Because everyone stick to the charts only, not giving enough thought on the numbers. But when you understand this big picture, it's easier to make the right decision. So Cat Frank was amazingly bullish until, look what happens. 4-hour became a cycle by itself with a bearish divergence, with a new high, bearish divergence. The daily becomes a cycle by itself with a bearish divergence, right? And all these things together, and look at the 1-hour chart, by itself becomes a bearish divergence. So all 3 time frames show bearish. What does that tell us? Partial cash out or any other sort of management is required. Even if you had big dreams, you are now in a position when market tells you, you know what? Maybe to dream big, it's not correct thing to do with this one right now. And if you listen to the market, that's the best place to make the money. Partial, or at least go break even, not to lose the money. And this is how critical it is to keep a follow-up of your synchronized cycles or time frame you work with. You know, I always work with 3 time frames. Any sequence, right? 1 hour, 4-hour daily, or 4-hour daily and weekly. Wherever the cycles I can find a combo in. This is very, 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 very important thing to remember. So Cat Frank delivered, and now what's next? Daily becomes a triple cycle by itself. When we go to the 4-hour, we can verify each of the daily legs to be cycled by itself. First cycle, second cycle, second leg, sorry, third leg. 2 false breakouts come in play, 1 alternative trend line, 1 horizontal, and convergence. That means the daily the daily cycle is tradable and is likely to aim to this corrective area, which also, of course, could be just part of a ranging structure from the daily legs. This or other way around, Cat Frank, from a great, beautiful, short-term bullish opportunity, switches after a couple of days to a beautiful bearish opportunity. And sell the rallies would be the correct plan here. Up until where or what is the invalidation for such scenario if we suddenly go above 61.8 in one shot, right? Zigzagging conditions through acceptable Fibonacci retracement level would be a warning sign. As long as we hold that level and we do not cross above it in one shot, the pressure is bearish and we expect bearish continuation down. Short term, it is again daily cycle with 4-hour chart verification, 1-hour chart possible tradings. For all those of you who love the short term or intraday, you can go to lower time frame and look to break it into smaller waves and look to trade there. Just idea, of course. So this is the CAD franc, a very, very important update. Questions about it? Do you have any questions, guys, about it? It's very, very important to have this read always, because, you know, when you start a week, you build your plan. It's like, oh, awesome, let's ride it. But, you know, when you are riding and you are going to, and you see traffic in front of you, you have two options: or get stuck in the traffic and wait for good, or find alternative as long as they are there, available. Alternative roads. Same here. Good. No question about the CAD franc. That means or I scared you or explained well. I hope it's option number 2. Euro Aussie. The view was bearish also yesterday. Jordan updated this one. This idea failed to deliver. We never got a bearish continuation. The Australian news changed the direction, and after the break of this trend line, the plan invalidated. What's next? Currently neutral. We will be observing to see how the price movement behaves and what it provides next. As for now, too early to judge. Euro franc going good after let's go quickly about the whole structure here. Triple cycle on a daily, bullish divergence, holding of the supportive area. 4-hour chart verifying a bullish divergence by itself, and the 1-hour chart gave us the structure of a bullish turnaround. 3 higher highs, higher lows. No divergence was against us. Our plan by retraces. So here is the Euro franc, and it provided us basically 2 opportunities since Monday. That was the first, higher highs, higher lows by retraces, and the boom we got here. Then we blocked with bearish divergence required correction. We got 1 leg correction with a bullish hidden divergence and further continuation. Keep in mind that none of the time frames had any signs against in the cycle, and that's why the Euro franc basically yet bullish. What do we need to pay attention to? On the bigger scale, it builds 2 waves correction right now, meaning as long as this trend line holds, pressure is bullish. If we break below this trend line, that turns to be a ABCD pattern with a potential trend continuation. Too early to know that. Meanwhile, the pressure is bullish. I want to remind you that we are trading the daily cycle. According to daily cycle, the correction could be 2 waves or stay within the range. How exactly will that develop? We have no idea. Meanwhile, the pressure was and remains bullish for us. For all those of you who are involved in the buys, perfecto. Enjoy, manage, do your management, cash outs, trailing, partials, whatever it is, according to your strategies, rules, and let it going. Next one. So Euro franc has no updates for us. Euro pound, also the expectations for bullish continuation up. we're still within the daily corrective cycle. This did not change, and despite yesterday's zigzags, which without any doubt looks suspicious, right? Especially when you're exposed to that during the day. Here, suddenly boom, suddenly crash, up again, down again, all that within some range of hours. But despite of the intraday noise, rumors, speculations, call it just blah blah, whatever you want, despite of all that, the structure remains the same. Nothing changed. The only thing changes right now is that the 4-hour chart starts to develop bearish divergence, and 1-hour chart confirms it. That means if you are involved in buys, this is a good place for partial cash out. Why partial? Because the daily cycle did not change, and the daily cycle did not deliver to 38.2 yet. So the cycle is yet in place. However, the two lower time frames are against great place for partials, cash outs, or just managing, trailing, reducing the risk, reducing the exposure, etc., etc. Okay. However, the pressure remains bullish yet. And what do we have to pay attention to? Assuming this is yet in the corrective mode, of course, that's the trend line. As long as we are above it, it's bullish, and this becomes as invalidation. Break below that might open the doors for a bearish pressure. So euro pound, so far so good. Pound Australian, bullish with the break of the trend line. Let's see, where do we stand with that? Bullish with the break of the trend line. Nothing changes in, just zigzags. However, the pattern is yet relevant. Daily doesn't look bearish at all, so our view remains bullish as well. Buy retraces. Invalidation as for now, of course, is this, because that's the last place where we got the divergence. False break, higher highs. Okay, let's move on. Unchanged here. Pound New Zealandian looking for sell the rallies. Let's see, where do we stand with this pair. Basically all the same. The bearish hidden divergence is yet in a play. Personally, I dislike the behavior since yesterday. Look what happens. One candle range. Suspicious sign, of course, but the ABCD pattern still holds. This is the one I refer to. Triple double structure, right? Trendline holds again, zigzagging, ugly during the last 2 days. However, the bearish pressure is yet on. In such cases, my preferable action is reducing the risk, meaning if, just for example, I'm sitting in with a lot, I'll kill half of it or 70% of it to drop the exposure. Why? I don't want to wake up to random reaction. So if I profit, I still have a great risk reward. If this is a sign of bearish weakness, this range, then I don't want to wake up under randomness. The pressure remains bearish due to the structure plus bearish divergence. This is the lower time frame structure, triple double. 4-hour gives the bearish hidden divergence. And the fact that the daily was the cycle requires corrective cycle. 1 + 1 normally equals 2. That's why my view remains bearish. However, with lower exposure. It's very, very important here. Okay, why? Because we're stuck since Monday Nothing happens. Been signed a bit up, a bit down. Well, a bit maybe it's not the correct word when it comes to you pound kiwi, but slightly up, slightly down, slightly up, slightly down, zigzag up, zigzag down. This is suspicious, definitely. Did any of the cycle change? No. Does the technical structure change? No. Do we have any divergence against us anywhere? No. Should we be scared because of technical pattern? No. So what's the concern? The fact that the bearish momentum, which is expected to be serious due to the structures, is lacking of existence. It's not here. So it might be a warning sign, and that's why the reducing exposure is so important in such cases. Okay, that's pound kiwi. New Zealand CAD, New Zealand dollar. Now these two are super important. And before I move on, is there any questions, guys, about any of them? About anything explained so far? Not pairs that are not included, only the ones that are included, please. All right, great. So far nothing. Then the New Zealand dollar and the New Zealand CAD. Both were under the bearish view, meaning sell the rallies. And now look what builds up here. Daily, which had one false breakout, is building a potential. And I say potential because the day is not over. Second false breakout was a bullish divergence. So basically from 2 days ago, the market went a bit down and now going back to the same level. Now we start to see signs against from one of the verification cycles. 4 hour is building up the false breakout as well. First one was here. Second one is building up. So what does that mean to us? That means one thing. Neutral. Neutral means the bearish pressure is under be careful signs. The bullish pressure is not yet here. Why? After the 2 false breakout, we never got convergence yet. After the 2 false breakout, we also never got 3 higher highs, 3 higher lows yet on the New Zealand dollar. What does that mean to us? If the bearish is not attractive anymore and the bullish is not yet in play, the best place to be is on a neutral mode, the best mode, or sit on the fence. Very, very, very important. Monday started beautiful, great pressure, everything looks promising. 2 days after, the market reacts this way. For traders, there is always 2 options in such case. One, to say, it will be fine. I know what I'm doing. It has to crash, whatever it is. To find an excuse. Second option is to listen to the market. Why to listen to the market? Because we want it or not, but the market always knows better. The market doesn't care of the lines you, me, or anyone else draw. The market will reflect to the numbers as they develop. Okay, so New Zealand dollar is removed from the list, going to neutral, and New Zealand CAD, which also was bearish a couple of days ago, which also went down a couple of days ago, now doing the same, building the second false breakout on the daily, building a bullish divergence on the daily time frame, building a bullish divergence on the 4-hour chart time frame, and building here the second false breakout. First, second. So the daily is now a triple cycle with a bullish divergence, right? For our chart, is now verifying a cycle on each of the daily legs. Well, here it's obvious, no need to draw, right? And the 1 hour chart, we get a false breakout here, little, tiny, okay? And a false breakout on the alternative trend line. And besides that, we are changing to higher highs. Okay, not a full convergence, a convergence principle, but all the things lead us to the same conclusion. The bearish pressure is currently over. Another factor in consideration, it is a psychological zone of 85.50, a massive supportive area from the weekly, right? Weekly by itself is a potential bullish divergence. I say potential because it yet didn't tick and didn't cross. Too many things currently look too suspicious in the bearish direction, and the bullish direction in that case show the turnaround. Therefore, New Zealandian CAD is expected for a bullish pressure. So buy retraces would be the plan for us. Questions about the New Zealandians? Good. Why is New Zealand strong? Doesn't matter. I think it's mainly due to the weakness of the dollar generally. Plus, commodities period looks like coming back. New Zealandian, Australian, and Canadians are the first one to be affected. Good, so no technical questions, and we have two of the rest left for us: dollar franc, dollar yen, where we on both of them we were riding the buys. Dollar franc delivers, beautiful ride, but now developing its bearish divergence on a daily in a possible bigger scale of bearish divergence in this triple cycle. For our chart now, for the first time, develops a bearish divergence. And I said for the first time because there was no divergence here. So this was a very nice short-term buy. Now it's a triple cycle, false breakout, daily divergence against, going neutral. Why neutral and not bearish then? Because divergence is a warning sign, it's not a reversal sign. For reversal, you need an official bearish structure. How do you know that how can we know that the divergence will tick here and not here? It might be the same divergence, but the price might go much uglier. So we need a reversal sign, two false breakout and convergence, which we currently do not have, or three lower highs, three lower lows, which we currently do not have. So while the bullish side shows be careful as all the time frames develop warning signs. There is no bearish appearance yet, and therefore the dollar franc, we say thank you, Mr. Market, for delivering us this rally from previous week, and going neutral. Game over. Dollar yen, same story exactly. We've been riding the buys since this one came in play. Basically, we're riding the sales, then after this turnaround, return to the buys, and the same story exactly. Look what happens on the dollar yen. The rally stops with a bearish divergence, and the daily, its own divergence. Game over for the buys. And now there comes the question, do we have any sell structure? 2 false breaks conversions? No. 3 lower highs, 3 lower lows? No, not yet. Therefore, what do we do in that case? We are waiting for the structure to develop. Keep in mind that the non-farm payrolls will be published in 2 days, and this is the first pair to be affected by the numbers. Dollar yen is. So as for now, the best thing is to go neutral. Simple. Okay. Kellyanne, is the New Zealand dollar not massive support from September 2015? This one? Of course. 100% yes. 100% yes. And it's so close to the psychological 060, so 100% yes. The only thing here is we do not have yet appearance of bullish power. We do not have higher highs, higher lows. We don't have 2 false breaks and convergence. So to know will that hold or not as a turnaround, it's simply too early. Simply too early. Okay. Good. So what does that leave us with before we are going to commodities and talking about indices which are back in the game? Several instruments changed directions, like the New Zealand CAD, for example, like the CAD franc, right? Several developing, like the euro pound, like the euro franc, like the pound Aussie. Several where we need to apply decisions and management, like the CAD franc also discussed before, like the dollar yen, dollar franc, which were rallying greatly until they start to show all the time frames against. And it's a very, very important, and like pound New Zealand, right, where it doesn't develop. It looks so amazing, but doesn't develop. Cutting the risk is so critical. You do not want to remain under randomness when it comes to the market, especially before critical news in 2 days. Very, very important, and I hope I managed to explain that clear enough. And I want you guys, you with yourself, to remind yourself the things, because you and only you with yourself are going through these emotions and thoughts when you are trading. I'm not sitting in the chair next to you. I'm always in the groups for you, but I'm not sitting in a chair next to you. It's important to remind yourself these things. Very, very important. Not to fall in love with your idea, not to dream about a big fish, not to dream about a huge move and the dreams like, oh, now I'm going to be a millionaire because of one trade. No. Trade here, trade now, and stay tuned to the market. As long as it doesn't give signs against you, ride. We never know in advance how well it will ride or not. We never know. We can't know. We can wish, we can say, but we never can know. We trade probabilities and facts. Okay, and about this, we can tell ourselves, there's a good joke about it. Two sales coaches are meeting in a conference, and one coach comes to another and tell him, so how do you increase sales? The second coach tells him, well, I can tell you. The first one tells him, to tell I can do by myself. I can tell by myself, but how you actually do it. So same here, right? Same in trading. You can tell yourself a story or tell someone else a story. Will that turn into the reality? No, the market doesn't care of your story, of your lines, expectations, and so on. Trade here, trade now. Trade facts. As long as the facts are with you, ride the trend, enjoy it. When you start to see lack of synchronization, especially from the higher time frames of the three you are working with, be aware of that. Trust me, it's much better to take the money with, let's say, one-to-one risk reward, ideally more, rather than to just regret later on. And that in trading, the bottom line is to make money, not to be right, not to draw lines better than someone else. We as traders want to make profits, the bottom line. All goes. As long as you don't cheat, bend your own rules, and try to beat the market. It's impossible. You can be part of the market. That's a good question, Hamad. How can we know which pair is strong or weak? In advance, you can't. That's the truth. In reality, you can. Pair that has synchronization in the same directions from 3 different time frames is much stronger and has better chances to deliver than a pair that is missing 3 time frame synchronization. Synchronization could be among divergences, cycles, trends, just higher highs, higher lows, price action, moving average direction, or MACD direction. Doesn't matter. Doesn't matter how you do your multi-time frame. It does matter, however, you trade with the ones that have better chances, and the ones that have better chances are the ones that are synchronized. And now we are into commodities and indices. Gold and silver, we have been riding the sells, and if you watched the Monday session and basically the weekly forecast, this is what I was talking about. Get ready, it will come. And now comes the question, is it bullish already, or can we still see some move down? So let's talk facts. According to the very, very long term, we're still bullish. We never tick down. Weekly never created false breaks and lower lows. Daily never created trend definition, meaning 3 lower highs, 3 lower lows. Yes, it did create 2 false breakouts and lower lows convergence principle. Yes, but it never managed to turn the trend to bearish trend definition yet. So what will happen? Are we going for a third leg and then lower highs, lower lows? Or was it just a BCD correction? Or even it fits in a range correction yet, and we continue higher? This or other way around, we don't know right now, but we do know a fact that the bearish move we've been riding for a couple of weeks, for a week, previous week, now finished with a bullish divergence. 4-hour chart showed by itself a beautiful ride here on the Bollingers. Divergence. Actually, there was no divergence in the 4-hour chart. It's just the bottom of the range. Right? There is no divergence on the 4-hour chart. So the daily is the bullish divergence, the 4-hour is the range, 20 candles right. Game over. Looks like extreme on the 4-hour chart. It has enough lows to work with. But again, do we have now a return to the buys? No. Why not? The trend line was not broken. Do we have false breaking higher highs on the 4-hour? No. Do we have 3 higher highs, 3 higher lows on the 4-hour? Again, no. So as for now, the gold, which was amazing ride, is going neutral. We say thank you, Mr. Market, and we enjoy from what it gives. Jose, yes, it is the Bollinger Bands. Now, natural gas, a quick update. There is no trendline breakout, so we are still waiting. Also, no false breakouts and higher highs, and no higher highs, higher lows. So natural gas is unchanged. And here is a new addition back in play. Indices. I will explain S&P and DAX. You can apply the same to the rest because it's pretty much following. S&P holding bearish divergence on the weekly chart. Double top, ticking down from previous week. Daily holding the same zone, doesn't really provide anything new from this area. No clear divergences in play. Doesn't really help us with any way. The only thing it does have for us is the slowdown, but the divergence here is missing. So can't say I even really like it. Daily doesn't help, but the 4-hour does. By turning that, well, it can simply work here with the triple and a ranging condition and a continuation. So that could be first leg, and that's the developing second. I said developing because there is no divergence against. Or it can simply be the one that just gains bigger legs in bigger scale. This or other way around, all the time frames starting from the weekly, daily, and the 4-hour currently are gaining momentum. Therefore, the plan is sell the rallies. That's S&P. German DAX technically looks better. After the corrective cycle we had here and the divergence we built, this one went into the ranging structure. So is it a short move inside the range, or is it a bigger move into the correction down? Still early to judge. According to the monthly, I want to remind you, we are, of course, ultra bearish with the expectations of this deeper correction. Weekly so far now confirms with a hold and the bearish divergence that comes in play. The daily time frame by the divergence by itself on this triple cycle, and the 4-hour chart is gaining us the bearish momentum. And that's pretty much it. Sell the rallies is the plan. Invalidation for all of them, as always, the level of 61.8, if we suddenly, for whatever the reason is, go and cross straight forward above the level. So indices, welcome back to play. So the rallies is the plan. Cryptos, Ripple and Ethereum, Bitcoin, that's the two we had. So for the Ripple, we want a trendline breakout, yet to deliver. or if the 4-hour would provide the higher high finally, right? Then we will get the structure of higher highs, higher lows, and we can discuss about the buys. Any of them to happen would activate BTC, would activate the buy, and the Ethereum Bitcoin unchanged so far. We are in the 3 higher highs, higher lows. We expect retraces and buys. 2 waves, bullish hidden divergence, or a range. The idea of ours remains the same. We want to ride this cycle. That's all for today, guys. Any question about anything so far? Very, very, very important thing which we take with us from today's meeting. The market adjusts. Do it with him. Do not fall in love with your ideas. Do not fall in love with drawings or whatever it is. Always follow the facts. All right? Always follow the facts. So that's all for today. Thank you very much for being here, guys. I wish you a wonderful evening. I'll see you in the Telegram. And tomorrow, Jordan is with you. I'll see you in the chats. Ciao for now. Enjoy your time.